What is happening, crypto fans, and welcome back to Bitcoin Bulletin, your ultimate source for the pulse-pounding world of digital assets. The market is absolutely electric right now, with news dropping faster than a lightning strike, and you need to be in the know. We've got a packed show today that you absolutely cannot afford to miss. Get ready, because we're diving headfirst into the stories that are shaping the future of finance, right here, right now. First up, we're talking about a major comeback in the regulatory space, signaling a massive shift in how we think about payments. Then, we're breaking down the wild ride of Bitcoin's price action and what the big players are saying about hitting that incredible $100,000 mark. After that, we've got the inside scoop on why governments and institutions are making some serious moves, stocking up on Bitcoin like never before, and what that means for all of us. And finally, we're uncovering the strategic advantage of getting in early on Bitcoin, exploring its inherent scarcity and why ownership concentration is key. Stick around, you won't want to miss a single second. Don't forget to smash that like button, subscribe to the channel, and ring that notification bell so you never miss an update. Let's go. XRP's regulatory resurgence, a new era for payments. Get ready for a seismic shift in the payment landscape. XRP is making waves, not just with its technological advancements, but with a significant regulatory comeback that's poised to redefine the future of financial transactions. This isn't just about one cryptocurrency. It's about a fundamental reevaluation of how digital assets can power everyday commerce and remittances. We're seeing a clear movement towards what's being called the PayFi revolution, a term that encapsulates the integration of payments and decentralized finance. This evolution suggests a future where cross-border transactions are faster, cheaper, and more accessible than ever before. The implications are massive, especially for those who have been holding Bitcoin and are now looking for utility beyond just a store of value. Many are recognizing that while Bitcoin has been the pioneer, the next wave of innovation might lie in cryptocurrencies designed specifically for high-volume, low-cost payment solutions. This story delves into how XRP's evolving regulatory status is not only boosting its own prospects, but also catalyzing a broader trend where Bitcoin holders are increasingly exploring and investing in these high-utility payment cryptocurrencies. It's a fascinating narrative of adaptation and growth within the digital asset ecosystem, highlighting how regulatory clarity can unlock tremendous potential and drive mainstream adoption. We'll explore the specific regulatory developments that have bolstered XRP and the arguments for why this shift towards payment-focused cryptocurrencies is gaining momentum among a significant portion of the crypto community. Prepare to understand how this could reshape your financial interactions. But hold on, because as the payment world gets a jolt, the king of crypto is also making headlines with its own dramatic price movements. What's next for Bitcoin? Bitcoin's $100,000 question: volatility meets institutional demand. Is the $100,000 mark for Bitcoin not just a dream, but an imminent reality? The digital asset market is buzzing with speculation as Bitcoin continues its volatile dance, and a critical factor driving this conversation is the increasing influence of institutional investors. These large entities, from hedge funds to major corporations, are no longer just dipping their toes into crypto. They are making significant allocations, and their strategies are deeply intertwined with Bitcoin's price trajectory. This surge in institutional interest is a game changer, providing a level of validation and stability that was previously lacking. As more traditional financial players enter the space, they bring with them substantial capital and a demand that can significantly impact market dynamics. We're witnessing a fascinating interplay between Bitcoin's inherent volatility, its well-known price swings, and the steady, albeit sometimes cautious, accumulation by these powerful institutions. Analysts are closely watching the correlation between institutional inflows and Bitcoin's price action, with many suggesting that sustained institutional demand could be the catalyst needed to push Bitcoin past psychological and historical price barriers. This isn't just about hype. It's about a fundamental shift in how major financial players perceive and utilize Bitcoin, moving it from a fringe asset to a potential cornerstone of diversified portfolios. We'll explore the specific data points indicating this institutional embrace, the various analyses predicting the $100,000 threshold, and what this means for the broader market sentiment and individual investors looking to navigate this electrifying period. While institutions are eyeing Bitcoin's ascent, another powerful trend is emerging. Governments themselves are quietly becoming major players. What does this mean for the future? Governments and institutions go all in on Bitcoin, a price surge incoming. Prepare for a potential perfect storm in the cryptocurrency market, as a powerful confluence of institutional investors and sovereign governments are actively accumulating Bitcoin. This isn't just a minor trend. It's a significant shift in global capital allocation that could have profound implications for Bitcoin's price and its role in the international financial system. For years, Bitcoin has been championed by early adopters and tech enthusiasts, but its growing acceptance by established financial institutions and, increasingly, by governments marks a new era of legitimacy and demand. We're seeing reports and analyses detailing substantial purchases by entities that were once skeptical or outright dismissive of digital assets. This strategic accumulation by governments, often driven by a desire to diversify reserves, hedge against inflation, or explore new technological frontiers, adds a unique layer of stability and long-term demand. When combined with the growing influx of institutional capital seeking high-growth assets, the pressure for higher prices becomes immense. This situation creates a compelling narrative for a significant upward price movement, as supply becomes increasingly constrained while demand from these powerful players continues to grow. We'll delve into the specific countries and institutions making these moves, the underlying motivations behind their Bitcoin strategies, and the expert opinions on how this concentrated buying pressure could propel Bitcoin to new, unprecedented price levels. It's a story of strategic foresight and a growing belief in Bitcoin's enduring value proposition. But what about the individual investor? Is there still an opportunity to get ahead of these giants? Bitcoin's scarcity advantage. Why early entry is a strategic masterstroke. In a world awash with digital information and rapidly devaluing currencies, Bitcoin's inherent scarcity is emerging as its most powerful strategic asset. This isn't just about a limited supply. It's about a fundamental economic principle that, when combined with growing demand, creates a compelling case for early adoption and strategic ownership. Unlike traditional assets that can be printed or devalued, Bitcoin's supply is capped at 21 million coins, a feature hard-coded into its very DNA. This predictable and finite supply acts as a powerful counterpoint to inflationary pressures and a safeguard against arbitrary monetary policy. The concentration of ownership, while sometimes a point of debate, also plays a crucial role. Early adopters and strategic investors who recognized Bitcoin's potential years ago have accumulated significant holdings, creating a solid base of long-term believers. This concentration doesn't necessarily mean manipulation. Rather, it reflects a strategic positioning in what many believe will be a foundational asset of the future digital economy. Understanding this dynamic is key for anyone looking to participate in the crypto space. It highlights the importance of timing and strategic entry, suggesting that those who get in early, understanding the principles of scarcity and the long-term vision, are positioning themselves for potentially significant gains. This narrative explores the economic principles behind Bitcoin's scarcity, analyzes the patterns of ownership concentration, and provides insights into why a strategic, early entry remains a potent strategy in today's evolving financial landscape. It's a deep dive into the foundational economics that make Bitcoin a unique and potentially revolutionary asset. And that brings us to the end of another action-packed Bitcoin bulletin. We've covered regulatory shifts, price predictions, institutional plays, and strategic advantages. What a ride! All right, everyone, that's a wrap on another electrifying Bitcoin bulletin. We saw XRP making regulatory waves, potentially igniting the PayFi revolution. Bitcoin's eyeing that massive $100,000 target amidst growing institutional interest. Governments and big players are stacking sats, signaling a bullish future. And we uncovered why getting in early on Bitcoin's scarcity is a smart move. Don't miss out on any of these critical updates. Make sure you're subscribed, hit that notification bell, smash the like button, and let us know your thoughts in the comments below. You can also follow us on all our social channels for even more real-time insights. We'll see you on the next one.